Traders from around the world, what's going on? It's your boy Ricky Cadden back again with another free Friday stock review just for you from Real Life Trading Australia. Hope you guys are doing stupendously, sensationally amazing today. Hope you guys have had a phenomenal week. I will dive in and talk about this amazing trade setup that I did post just yesterday. But before we do that, guys, let's dive in and take a look at the broader markets and see what happened on the S&P 500. So the SPY, now if you are in my trading room, you would have notice that I did say that we are in a consolidation zone. This is a previous level of resistance and we are currently a little bit high right now. However, it does not mean we cannot go higher. I just think this is a nice little selling location, nice little level to at least chop around sideways before we either bounce and or roll back down and catch another dip off the 100. But for the most part, guys, I'm just fairly neutral right now on the S&P. If you take a look at the EMinis, you can see on the shorter term moving averages, we have come down to the 10 and we are forming some delectable hammer candles right now. So will we bounce? We'll have to wait and see. I did mention back on this day that this is a selling location just simply because of the previous high that we have had. And I'm not overly convinced that we're going to go crushing on higher just yet. We could potentially break back down to around 3,500. I did mention that in my past video. So if you haven't gone and watched that, click the last video and then take a look at that. I did also mention in my last video about Teledoc. Now this was a great trade setup that I did post in our trading room. We did get triggered into this sensational stop limit buy of Teledoc. Take a look at the long-term moving averages. We are bouncing off the 200 simple moving average with a double bottom. Wow. So if you are a part of real life trading, you would have got this trade set up straight to your inbox and you'd be in right now and looking very, very healthy. So Teledoc, definitely do believe this will go higher. Looks absolutely sensational and look to buy the dip. If you're not in right now, just look to buy on a short-term pullback and then take it on higher. Now here is by far probably the greatest trade setup of the century. Take a look at this. Now, Wix, you can see what I did mention here. This is not just your average buy and hold shares, guys. This is a trade setup that is $0 up front. Does not cost anything up front. Yes, it does require margin. You do need to have a margin on your account. However, this particular trade setup does net you a 7% ROI from day one, and it also has an unlimited upside profit potential. Now, how is that? Well, simply, we have sold a put at the 200 strike for January 2023 for $40, so we receive $40 per share, and we are buying the out-of-the-money call options for $350 at $26. So it is a $14 difference right here, which equates to $1,400 per contract. So if you are a part of the Facebook group and community, you can hop on over to here at Facebook. I'll leave a link in the description below if you do want to join. And you can see I posted this yesterday afternoon. And I mean, if we take a look at Slack, which is our community in our trading floor, and you can see a lot of people getting filled on this particular order. Everyone absolutely loving it. David here saying, what's that? Free money? Amazing. Shut up and take my money, or just give me money. Absolutely sensational trade. Probably the biggest bull flag of the century. You can see this bull flag right here shaping up very, very nicely. And we are looking to buy the dip. I mean, look at the volume that's coming in. I'm super excited about this trade. Hope you guys did get to catch it if you are a part of the community. If not, get involved. There is still time. You can still post this trade. You may or may not get $14 per contract. However, you could potentially get $13. So there is, it has moved higher. However, if you don't understand options, I wouldn't take this trade at all. You do need to be happy to buy at least 100 shares down at the $200 level. So keep that in mind. Wix, we are in this particular strategy, by the way, is my very own strategy, and I call it a diagonal synthetic long stock split strike. What a mouthful. Absolutely crazy. Get involved. If you do want these particular strategies in your inbox, hop on over to reallifetrading.com.au and sign up. It's only $129 per month. But No more sales pitch, guys. Let's take a look at the broader markets in Australia. So here is the ASX 200. Now the ASX, boy oh boy, are we getting high right now. Super duper high. We did get a retest gap, had a small little retest, and we are trading higher. End of week, people starting to look to sell. You can see the market's now closed, and we closed at 60.88. 60.88, not overly a massive resistance. On the weekly chart, we did break above the 100 and close above the 100. If we do get a pullback, then that would be a very nice sensational dip buying opportunity. And or if you are looking on the shorter term moving averages, you know, the 10 is most likely there as well. So it does, if we do get a pullback, it makes a lot of sense to buy off that particular level. But CBA, wow, closing at $80. The last 2 weeks, we have already rallied, you know, almost 20%, 16%, which is massive. Huge volume. I can almost guarantee there is going to be some sellers happening on Monday come next week. Makes a lot of sense. And take a look at the weekly chart. I mean, this is just absolutely gracious, glorious. Look at this double bottom on a weekly chart. Wow. We do have a neckline here, so if we do get a pullback, that will be the next dip buying opportunity for CBA. And another one that's at a nice dip buying location is Zipco. So ticker symbol Z1P. We are currently just consolidating. I did mention that we are probably going to consolidate here for the next 6 months, or at least till the end of the year. I do believe that we will make it back up to $10 next year, but this is a low level. We do have sensational volume at this support level. I really would like us to break above the 50 and possibly retest and then trade higher. But a lot of people are in Zip long term, guys. So this is also a previous level of resistance. Becoming new support, makes a lot of sense to go higher. For all you futures traders, here is crude oil. Now we are currently just consolidating at this previous level of resistance. Not insanely great volume, so right now I'm fairly neutral on crude. I don't have any position on crude at all. Gold is still consolidating. It is getting very, very low. I don't expect this level to break, although it is looking quite weak, even though the dollar is also looking quite weak. So if you take a look at the long-term moving averages, guys, we are still above the 200 simple moving average. We could completely trade sideways or at least come back down to the 200 before we do bounce. But long-term, I do think that gold will go higher. Take a look at the dollar index, and you can see here we did close below this support level. We've retested, and we've retested twice. It's just a matter of time before we break lower, which means that the Aussie dollar will start to move on higher. I did mention this in my last review. We are at a small little resistance level right now. Cute little bull flag pattern happening right now. Not insanely great volume, so we could take out this level quite quickly next week. So keep your eyes peeled next week for a nice little push higher on the Aussie dollar. Alright folks, I'll be back next week with another free real life stock review just for you. If you would like me to do any analysis on any stocks, leave it in the comment section below and I would be gladly doing that for you. Have a great weekend, and until next time, love life, live life, and trade it. You guys rock. Bye.